All right, welcome back to this week's breakout and breakdown watch list from May 8th to the 12th. Even though the indexes continue to climb higher, the same can't be said about the stocks under the surface. So in today's video, we're doing 6 long and 4 short setups. And before we get started, this video is sponsored by MarketSmith, which is the trading research platform that we're going to be using to break down each of the setups. And finally, if you're coming here for a specific setup, there's going to be timestamps in the comment section below. Here are the 6 long setups, along with the 4 short setups that we'll be covering in today's video. So let's jump to the charts and get to it. The first stock that we have is DECK. This is in shoes and apparel, 9th out of 197. Very strong individual group. Got that A+ group strength rating, 98 overall composite, along with a 97 individual relative strength rating. Whenever you have 90s or above, both composite and individual relative strength, it's a stock that I just want to have on my watch list. It might not be ready to buy right away, but I want it to be in the world of stocks that I look at. With this one, you can see it's in a major uptrend. We're above the 200-day, the 50-day, the 21, and sitting right on the 8-day exponential moving average. What I like about this is we had a quick pullback to the 21, undercut it, but then closed well up in the daily range, right by the 8-day exponential moving average here. From there, just traded sideways, starting to tighten up. If this tightens up for the first half of the week, that would improve the setup. Right now, it's still a little wide and loose, but it has the trend, it has the group strength, so I wanted to put it on your radar. But ideally, this is a trade that I take in the second half of the week, eventually breaking over the previous highs here. Call it 490 as a potential entry, but if we could pull into the 21 EMA and then protect our risk against that, that would be ideal too. So let's go DECK. The next stock that we'll cover is ESAB, and I've watched this stock for a long time, but I haven't personally traded it yet. This is in machinery, industrial, 33rd out of 197, A- group strength, 86 composite, 93 relative strength. You can see he was in a nice strong uptrend, took out the previous highs from the IPO. From there, it got a little choppy, did undercut the 50-day moving average quite a bit here, but it looks like when the 8, the 21, and the 50 all curled up, it got going to the upside. So a couple different ways to play this. If we pull back into that area around 58.50, just getting in around the 50-day moving average and then keeping a stop under the low here, call it 57.70. Very, very tight risk if you do it that way. Otherwise, on strength, I wouldn't have as much confidence given where the market is with the indexes railing and not much else going with it. So I do want to play this on a pullback to that moving average, but like all the setups, the longer they trade sideways and tighten up, the tighter our risk can be, and we don't need to press anything that's not there. Next, we have a very liquid stock, ISRG. This just had earnings. You see this gap up, about 11% move there on above average volume. Since then, pulled into the 8-day EMA, bounced, and now we're building above $300. This is one where I would want to get in around 300, as close to 300 as possible, and then use a tight stop loss, maybe 1% or so, keep it under 297. Because it's so liquid, it doesn't trade super quickly, so it's one that I wouldn't have any problem with trading a couple times, getting stopped out. 94 individual relative strength rating, A- group strength, 95 composite, positive earnings, sales, all that good stuff as well. So this is ISRG. Next we have KD, and this is probably the top setup that I'll be watching going into next week. We had this nice pop on earnings, even though earnings was negative, up 21% on 200% the average daily volume. From there, didn't quite go anywhere, actually broke down on above average volume under the 50-day moving average. Since then, we had a rally back up, and this is a setup that I've been studying for a while now, where you break the 50-day on above average volume, come back up to it, find some friction, maybe uppercut it for a couple days before pulling back down, and then putting in a higher low, which is exactly what's going on right now. You can see the 8 and the 21 EMAs below price, the 50-day, which is in a downtrend, slightly above price. So this, we're just looking for a break over Friday's high, 1449, call it 1450 as a potential entry there. The nice part about this setup is when you get your stop loss under the low of the day with the 50-day overhead, your stop loss is under a previous low, the 8, 21 exponential moving averages, and the 50-day moving average. So if it starts to take off and it doesn't pick up steam through the 50-day moving average and starts to break down, you know that it's more likely to actually be breaking down versus just a shakeout here. Next, we have a biotech stock, LEGN. This is one that I was watching at $70 to see if it had additional power to go through there. Did not, kind of traded sideways, broke down, and then putting in some consolidation here. With this one, biotech, you want to size it a little bit smaller just because there is that gap down overnight risk. This has earnings in 10 days, so if that's too close for you, just skip this one, go on to the next video or next setup. But let's go to a weekly chart super quick on this. You can see we broke into new highs over previous resistance around 57.60. So clear skies to the upside there. Inside candle on Friday, very, very tight price action on below average volume, which is nice to see. You want to see contraction of price and volume before an expansion of both. This is another one where a couple more days tightening up would be ideal here. Otherwise, just taking out $67 as a potential entry point and adding through $70 if it has that power. And last stock that we'll cover on the long side is Uber, UBER. This also had earnings this week, or last week, I guess. Very strong closing range, up 11% on 357% the average daily volume. Followed through to the upside, and then 2 quiet days right at previous resistance at 37.50, which makes sense. I would love to see the market, the indexes come in a little bit to start the week, along with this just showing some relative strength against the market on a down day. We've only seen the last couple days, or I guess on Friday when the market rallied, this was only up 0.7%. So it didn't have that power on a day where the market was strong. So now I want to see the reverse. I want to see some strength while the market's on a down day before I take action in the stock. So this is one that I'm monitoring. Don't have a true buy point just yet on the name. But if we come into $35, you got that 8-day exponential moving average coming up. But I would rather see it just hold right around this 37.50 area as the indexes pull back. If it doesn't, then it's just not a stock that I'll be trading. But we'll keep an eye on it. Uber. Now we're on to the short setups. The first stock is CF. Everything that we look for in a long setup, we're looking for the reverse in a short setup. So it's in the chemicals agricultural group, 186 out of 197. Very, very weak group. That's good for us if we're shorting. So E group strength rating, 40 composite, individual relative strength rating of 18. That's all ideal for what we're looking at on the short end. When a stock eventually breaks down and breaks that 50-day moving average, what you want to see on the short end is weak rallies coming up to the 50 that also get rejected. Institutions like to use that 50-day moving average or around that area to sell into any pops, and you can see it once, twice, 3 times, and then recently last week after earnings, negative 50% earnings, not growth, earnings dropped by 50%. We had a rally up to the 50-day and just reversed right on that area. If we open up to start the week and then take out 70 on weakness, that's the potential short area. And I would want to keep a 3% to 4% stop. There's not going to be a price or like a candle that I would put the stop above. Just want to keep it around 4% for CF. Next, we have the Chinese stock, FUTU, on the short side. If you don't like to trade Chinese stocks long or short, that's completely fine. If I do, I tend to just size them down a little bit and act quicker, both to the upside and the downside. With this, finance investment banks, 154 out of 197, D plus group strength rating. Does have a 91 composite, but this relative strength rating is declining. We're under all the key moving averages. We're not rallying with the indexes. So if we're looking for relative strength when the indexes are pulling back for a long setup, we're looking for relative weaknesses as the indexes rally, and that's exactly what we get here. So really tight price action, just a bear flag into this area. Looking for a break under Friday's low, 42.39 as a potential short entry point. And we are bringing one stock over from last week's list. Also on the short end, this is LOVE. This is one that was trading right up with all the moving averages bunched together. The 8-day, 21, 50, 200-day. Tried to get going actually to the upside on, what was that, Tuesday, but then reversed Wednesday, followed through to the downside Thursday, and did rally a little bit on Friday, up 3%, but it's still under the 8 and 21 moving averages. It closed right on the 200-day, and it made that move on below average volume, so it was really just getting pulled up by the indexes. This is one where I would feel pretty comfortable shorting at any point, really, around 26.25, 26.50, and then just want to keep my stop loss above 27.50, 27.61. If you remember last video, I said if we can uppercut 27.50 and then go through that area to the downside, that would be an ideal short entry point. And now that we've already kind of made that initial move to the downside, I don't want to see it come back and then uppercut that area. The relative or the small bounce on Friday is fine because the indexes were so strong, but really, this isn't trading very strong by itself. Let's see if when the indexes pull back, this just starts to collapse. So that's LOVE, Lovesac. And the last stock that we'll cover on the short side is Netflix. It's the only FANG stock that's really not rallying. We see the rest of the FANG stocks doing well because the QQQs are above all the key moving averages. All the moving averages are in an uptrend, all in the right order. Netflix, not the case. It does look like it has the potential to break to either side here. We're coiling very, very tight. You have the 8, the 21, and the 50-day moving average all on top of each other. But if this hasn't been rallying while the indexes have been rallying, and we're already past earnings, I don't see a catalyst for this to really get going unless just the market takes off. And at that point, I obviously don't want to be too short of anything. I always want to move with the market and get traction on my trades immediately. So this is one that I'm watching to the short side because it's so liquid. I don't expect it to gap up 50% or anything like that, blow out my account. But really tight trading recently. All the key moving averages either at price or right above price, except for the 200-day, and not rallying with the indexes. So looking for a break under Friday's low, 319.44. You can call it 320, and then just keep your stop loss, maybe 330, about a 3% risk on that trade to the downside with Netflix. So that's going to be the breakout and breakdown watch list of the upcoming week. If you guys enjoyed the video, please do me a huge favor and leave a like and subscribe to my channel. I make this breakout watch list video every weekend along with other trading related videos. And a big thanks to MarketSmith for sponsoring this video. If you guys enjoyed the trading platform that we were using to break down each of the setups and want to give it a try yourself, there's a link in the description below. And finally, if you want to hear from me throughout the week, you can follow me on the other social media sites. I'm at Nick Drendel on Twitter and at Nick_Drendel on everything else. I hope you have a great week, and I'll see you guys in the next video.